There is no first quarter on record having this size of Indian silver import demand throughput. Off the heels of the nation's record over 76 million ounce silver import month of February 2024, India continued pulling silver bullion float off the world markets to the tune of nearly 28 million ounces last month, March 2024. About half of the Indian silver import demand for March 2024 came through the lower duty UAE silver grain trade. My assumption is all of that is heading towards new green energy initiatives in batteries and solar demand inputs, helping to subsidize the effort to build an alleged cleaner energy grid in India. So a large portion of this record Indian silver demand is not store of value demand driven, but more so an emerging industrial powerhouse ramping up its silver inventory levels while spot prices are relatively still cheap. To put this record size near 123 million ounces the Indian silver market has imported in the first quarter of 2024, think of it this way. India in the first quarter of this year has imported as much silver bullion as the U.S. Mint struck and sold off in 1-ounce American Silver Eagle bullion coins in 2019, COVID 2020, 2021, 2022, 2023, and through Q1 2024 combined. That's 5 full years and 1 quarter of the United States' #1 retail silver bullion product by demand, equaled by India's silver demand in the first quarter of this year alone. Staying on the Asian side of the silver market demand equation, quick stop at headlines Japanese readers are seeing regarding silver's robust solar demand. Whether or not you agree with solar as any type of long-term energy transition solution, that really doesn't matter, as the world is heading that way increasingly so for now. While the fiat Japanese yen is devaluing at a rampant pace, its local price in silver has just passed its 2011 high. Look right at the full fiat currency era chart and take notice the fiat Japanese yen silver price still has to nearly triple from here to reach its seemingly ancient 1980 price, while at the same time its local gold price is hitting new record nominal prices month after month presently. Now let's turn to the Chinese side of this silver demand equation to better understand what has been happening in the country that demands the most silver for solar power capacity globally. Pretty much since the 2020 COVID premium lows locally in China, the local demand for silver bullion, much of which has gone into building out their world-leading solar capacity, has created a price premium now hovering above plus 10% over COMEX silver price quotes. China wants and needs silver bullion for solar, and it's paying a world-leading premium for it. The trouble for China silver industrial buyers is, technically speaking, looking at this chart, silver is saying breakout in monthly charts in local fiat yuan terms at the moment. Remember how last week we showed you it was leveraged derivative traders on the Shanghai Futures Exchange that were likely hurting and momentum trading, helping to push global spot gold and silver markets higher respectively last month especially? Well, now the bullish supply-demand fundamental story on silver is becoming more widely communicated in China too. Have a look and listen for yourself.
These Chinese analysts also believe that when gold rises to a certain level, the public will pursue silver. The price of silver will rise more in the next 2 to 3 years. Currently, everyone talks about buying gold in troubled times. In fact, it's the same for silver. When gold rises to a certain level where there is no gold to buy, or when people may not be able to afford gold, then they will go after silver. Gold and silver have a ratio. Currently, 1 ounce of gold is equivalent to the price of 88 ounces of silver. This ratio is relatively high, meaning that silver is relatively cheap and gold is relatively expensive. Historically, this ratio is in a relatively high position now, so when the price of gold goes up, people are going to pursue silver. To mention supply and demand again, in the future the demand for silver will also increase dramatically because the new energy is now particularly hot. Batteries, solar cells, including solar panels, all need silver in large quantities, which is related to the properties of silver. Silver has excellent conductivity and other metals are difficult to replace. With the development of new energy batteries, the demand for silver will soar. It's predicted that if the production of batteries and solar panels continues at the current rate, 80% of the silver stock will be depleted by 2026. One thing about silver, it's more of a byproduct. There are very few dedicated silver mines. More than 70% of it is a byproduct of other mining, such as copper, zinc, or gold. True, pure silver deposits account for less than 30% of all silver. Currently, the largest silver-producing country is Mexico. Mexico can achieve 20% of global silver production. However, due to Mexico's large amount of silver production, it's expected that by the end of 2025, Mexico's silver may be all depleted. This is very fast. If 20% of the world's silver is gone, then the supply of silver will fall.
Alright, that guy pumped right off the rails there at the end regarding his last point on silver production in Mexico. It was pure misinformation. Yeah, Mexican and Peruvian silver supply outputs might be coming down, but don't expect Chinese investors to be able to discern the fact that they won't disappear off the map. The truth about silver is yes, it's hard and costly to mine, but it's especially hardest to mine given the phony derivative-driven price signals we've lived under for decades compounding. Ones that have allowed us worldwide to literally toss trace industrial silver into landfills rather than profitably recycling that at dignified, much higher price points than where they are currently hovering at. Considering silver bullion is still priced near 30 an ounce in fiat US dollar terms, relative to all the inherently worthless fiat currencies we collectively con ourselves to give large swaths of our precious lifetimes for, well, the coming rebalancing of these off-kilter scales, overvalued fiat currencies versus still undervalued bullion, that's basically the working thesis of what I post on this channel week after week. You prudently save and store the value of the undervalued ones, you sell the overvalued ones. Turning back to China, given the mainstream financial media reporting this week on the speculative Shanghai Futures Exchange derivative trading momentum pile-on, I'm currently fielding silly, cynical questions regarding China like, quote, but are they accumulating the physical? Well, let's see. Last month, 69,000 gold kilobars flowed to China from the big Swiss 4 gold refineries. Is that accumulating the physical while also pushing day-to-day spot prices around using levered derivatives? How about both? Physical gold demand Q1 2024 is reporting up 6% roughly, 5.94% from Q1 2023 in China. More importantly, over a third of that Q1 demand was Chinese bullion bar and coin buying into the face of fiat yuan record price high levels. The more the fiat yuan devalues, the more positive self-reinforcing gold bullion buying you will see, especially from the younger Chinese biggest buying segment, disillusioned by poor performing Chinese real estate and competing stock market asset classes. Now, looking at the underlying silver bullion warehouse inventory levels on the Shanghai Futures Exchange and the Shanghai Gold Exchange combined, we see two obvious standout points. They are both rapidly shrinking, and combined, they are about 75 million ounces of silver, supporting these two Chinese silver trading markets. Now, that's just under the record amount of silver India imported in February 2024 alone, just a couple months ago. So that is basically the underlying silver market in the East at the moment. A systemically mispriced powder keg market waiting to explode in higher spot prices to come based on uber bullish factors building. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Want to win 500 Silver Tree of Life coins from SD Bullion? Enter and you could be the next lucky receiver of a phone call like this.
Hello. Hi, Stuart. This is Dr. Tyler Wall, president and founder of SD Bullion. And I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of 2023 Silver Eagles.
Oh my God. You got to tell my wife this, because she's not going to believe it. Honey? Okay, doctor, let her know.
Yeah, this is Dr. Tyler Wall. I just let you know that you guys won the monster box of 2023 Silver Eagles giveaway from SD Bullion.
No way.
Yeah.
She would never believe me if I told her that. I'm online all day long with your website looking for deals.
Wow, that's awesome.
Yeah, your site's fabulous and your company's fabulous.
Well, I appreciate that feedback. And we'll be following up with you shortly on getting your monster box shipped to you. Congratulations again.
Thank you, Doctor.
So click the link below because the next big winner could be you.
The silver and gold spot price markets finally had a large sell-off in prices this week. The spot gold price closes this week just under $2,350 an ounce, while the spot silver price finished the week above $27 an ounce. The spot gold silver ratio, which we'll focus on further to close this bullion market update, it finished this week's trading at 85. The commercial real estate market is slowly repricing in dribs and drabs as major downtown office spaces in large U.S. cities and metropolitans are taking haircuts anywhere from -50 to over -90% in their net present values versus what they were often bought for in the early 2010s following the 2008 global financial crisis QE re-fiat financialization run. I presume many of these ongoing commercial loan losses are currently hidden at the moment on pension fund balance sheets. The Fiat Federal Reserve admitted just a week ago that 1,804 U.S. banks and financial institutions, or 20% of the entire financial industry, took loans during last year's March 2023 bank crisis. The Fiat Fed also admitted that over $21 trillion of, quote, runnable money-like liabilities, sitting mostly on mega commercial bank balance sheets. Again, for anyone out there watching this, if you have over 250,000 fiat US dollars in a bank account, that amount beyond 250,000 is uninsured and subject to potential real losses if and when banks start being allowed to finally go bankrupt again. U.S. interest rate payment totals coming due by this time next year are being estimated at $1.7 trillion in interest rate expenses alone if the Fiat Fed doesn't cut rates from here to there. They're being estimated at over $1.2 trillion in debt interest payments if they cut 150 basis points from here to there. Gold bullion owned outright doesn't care either way, and come back in a year, I bet spot prices are higher regardless. Turning to the recent sell-off in spot gold and silver prices, we're going to turn to Pam Sweese's market analysis as she was in New York this week telling the CNBC crowd similar stuff.
Nikki Shields thinks the weakness is temporary, however. She's the head of metal strategy at MKS. Pam, Nikki, thanks so much for joining us here today. So this big drop today, you think it's just temporary?
Look, I think you got to put things in perspective, right? And since the October 7th Hamas attack, we've been up in a straight line, $600. So yes, it's been a pretty, a deep one-day retraction. And I do think geopolitics did sort of kick things off into frothy territory. But this is so much more than geopolitics. What's happening in the gold move, it's happened against a backdrop where we've gone from 7 Fed cuts to 3 to 2. We've had a very strong dollar. And you've had geopolitics just simmering, but real interest rates are sitting at plus 2%. So this is a regime shift that I think gold is internalizing over the last few months, and geopolitics is just that sort of takes it into sort of over frothy territory.
So what's the next catalyst then if you've got so many potentially at play?
I mean, I do think we go higher, but ultimately, 2,500, but it's not going to be a straight line like it was the past 6 months. I do think a healthy correction is in play because I think you're going to get a lot more people involved who have missed this move. A lot of people, ETFs have not really subscribed. We talk about strong physical demand, but it's not firing on all 4 out of 5 cylinders. So I do think some sort of correction, 2,200, and it just will re-rate to a less bullish trajectory going forward.
It's interesting. We talk about this as a safety trade. I think it's more than that as well, and it's great. Yeah. You're the best person to have on today, but as we've talked about, 2022, central banks bought almost $70 billion worth of gold. Record at the time. They did pretty much the same last year. They're probably on pace this year to do similar. So this is a central bank story probably more than anything else. Thoughts on that?
Absolutely. And I think this is what makes this time different. And you're so wary of saying that in anything in financial markets, like why is this time different? But this time is different versus all the other big gold rallies because you've had physical and central bank buying that is coming in and they're increasingly less price sensitive, like they've been in the 2011 gold spike in 2020. And so it does have a lot more legs and sort of a higher core foundation.
What is your base case for what the Fed is going to do, and then how does that track with gold? You sort of mentioned it at the top.
My base case is, it was 3 cuts. It's probably going to dial down to 2 for sure. But at the end of the day, does it really matter when gold still rallied and we went up from 7 cuts to 2 cuts, right? So they're going to cut this year. I think they'll be constrained to cut. 2 reasons: one, elections, and secondly, it's interest rate control. They'll cut, and I think gold will just price in a less bullish trajectory if they're not cutting as much as we expected.
What about silver?
Very bullish silver, because I think if you play on that sort of U.S. exceptionalism theme, green revolution, it's taking a little bit from your sort of Bitcoin crowd who kind of sort of full up on that. I think it's both a gold proxy and a reflation proxy, and let's talk about the green revolution, and I think it fits into all of that. So very undervalued versus gold.
The spot gold-silver ratio's rising channel since the Q1 2021 Reddit silver squeeze phenomenon. Before we dig into the technical formation it's reminding me of, let's hear from leveraged derivative pumpers at CME Group about how the spot gold-silver ratio relates to one another in systemically suppressed fiat financialized markets. Well, at the very least, there's going to be a chart crime, and there's going to be some pretty moving pictures from silver gold refineries in it.
Although gold and silver tend to track each other from a correlation standpoint, based on historical price action, silver is more closely tied to the ebbs and flows of the economy. Here are 3 reasons why. Gold is viewed as an alternative to the US dollar in times of increased geopolitical tensions and economic downturns. This can impact the gold-silver correlation during these types of disruptions. One of the primary factors here is supply. The gold market is over 10 times bigger than the silver market. A second factor, silver has a higher industrial use. Approximately 56% of all silver supply is used for industrial applications. Therefore, it would follow as global economic activity picks up, the demand for silver would increase as well. On the other hand, approximately 12% of gold supply is used for industrial applications. Another factor impacting the price of silver versus gold is storage. Because silver is much cheaper than gold per ounce, it costs a lot more to store silver than gold. This inventory cost can vary, but it does impact the price of silver relative to gold during economic cycles.
Back to where we are and how the current spot gold-silver ratio chart is mirroring a similar pattern built on this chart during the 2008 global financial crisis into the infinite QE kickoff era. The difference this time is the height from which we may end up falling again off this cliff. And while this dive off the GSR cliff, it might not be imminent or happening tomorrow, it's worth noting the respective formations and the speed of the dive that the spot GSR took in the 2010 to 2011 silver price run to 50 an ounce. This time, the fundamentals for silver are much more bullish and globally driven compared to the last run. To paint a picture of the spot GSR flowing back down through these lower technical resistance zones back towards the eventual beyond the 2011 low is what I'm leaving you with here. How that comes about will be a twisted fun ride for silver bullion bulls. Up first is the inevitable passing by of the pathetic 30 an ounce silver overhead resistance that could still take some time to do. Buckle up and get positioned and get ready, because when it does get past, the ride's going to get windier and funner still. That's going to be all for this weekly SD Bullion market update. As always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.